Attitude to succeed as an investor. Investment career dynamics. Attitude to succeed as an investor. Investment career dynamics. How stock market investment career is very different from normal jobs. Here is the contrast. Investment career. Irregular and lumpy income. Regular job. Regular monthly income. Investment career. Emotional management to deal with emotional roller coaster like ride in self. Regular job. Relatively low emotional upheavals on regular basis. Investment career. Attitude of long-term orientation. Regular job. Attitude of day-to-day task completion orientation. Investment career. Direct accountability in terms of profit and loss of one's decision. Regular job. Relatively low and hazy accountability. Investment career. Return on investment of time is totally uncertain. Regular job. Outcomes of time investment are reasonably certain. Investment career. The culture of family and community around one judges one on the basis of regular incomes and hence lot of pressure of negative judgment comments, strokes, etc. from them for lumpy returns. Regular job. Jobs are likely to have straightforward reinforcements from surrounding culture. Investment career. Highly uncertain outcomes environment and hence high emotional stress. Regular job. Likely to have reasonably certain outcomes of jobs, at least money, in general hence low stress. Investment career. No pressures of group dynamics and boss, sales growth or payments from clients, etc. But can be lonely. Regular job. Stress of group dynamics and bosses, colleagues, and other pressures, etc. is unavoidable. But can have fun of company too. Investment career. Need capital to become investor. Regular job. No need for capital. Investment career. High intellectual and emotional horsepower required. Regular job. The same may or may not be required. Investment career. Requires at least 10 years to master the art of investment. Regular job. May be so for the job profession too. Investment career. High level of creativity required. Regular job. Creativity may or may not be required. And so on. From above one can safely say that only people with very high emotional intelligence can do well in the investment world while others will sooner or later burn out due to addiction of irregular reinforcement provided by stock market investment outcomes. What is this concept of irregular, variable schedule, reinforcement and its dynamics in terms of addiction? Here I quote from Morgan and King, Introduction to Psychology, 7th edition. In a variable ratio schedule of reinforcement, the subjects are reinforced positively or negatively after a variable number of responses. For instance, reinforcement might come after 2 responses, again after 10 responses, again after 6 responses, and so on after different number of responses. An important consequence of many schedules of positive reinforcement is that other things being equal, extinction of learning tends to be slower, resistant to extinction, for schedule-reinforced responses than continuously reinforced ones. This is description of what is technically called variable scheduled reinforcement of instrumental learning conditioning. This is somewhat similar to what happens to traders in stock market. They get intermittently successful in making some money in speculation of stocks, and are thus hooked into this game for long time because this conditioning is resistant to extinction. Those who suffer more losses than gains alone get out after being burnt out. I have often heard people say that stocks investment is their passion. It is so said because they are into discussing about the stocks day and night like someone hooked and addicted. In reality, it might just be addiction of variable scheduled reinforcement described above. Please be very clear that passion is not addiction. It is strong emotional involvement without compulsion or being hooked. In addiction, one cannot help but compulsively think about the stocks one is hooked. From above I propose the following attitude for investment in stocks and businesses. One should invest for earnings growth in the business and not be unnecessarily get into emotional roller coaster due to volatility of prices. The volatility, in fact, provides opportunity to enter at a reasonable and fair price. For this, one must understand the future prospects of business in terms of growth and earnings, and secondly, one must have the skill or art of how to value a business or company. Volatility in prices occurs because bulls and bears get into fights and try to take the prices up or down respectively. Sometimes bulls win and sometimes bears win. When the bears win and the price has been beaten down badly, that is the opportunity for investor to take entry or make one's position in the stock. Also, sometimes the entire climate becomes so pessimistic. At time also one gets many opportunities to buy good companies at bargain prices. Buying and selling on tips is dangerous because one does not get the conviction to hold the company when the prices go up or down. One is likely to sell thereby either leaving money on the table or making a loss. There is very little chance of burnout in the above investing style, while trading mentality leads to a quick burnout in a matter of 2 to 3 years, and then people quit in disgust never to enter the market again, of course, blaming the market and operators for their losses, etc. However, to invest requires enormous intellectual and emotional horsepower because valuing companies and prognosticating about their future requires very good understanding of businesses and their economics. Besides, one needs to understand and manage oneself. Very few can meet this requirement, and hence only a few great investors, having a very long investment run, exist at any time in the stock market's history. Traders' life is very short as well, shallow and stressful. From above one can make out that investment is to a large extent behavioral field rather than economics field. It is the understanding and consequently the behavioral attitude that will determine whether one becomes a trader or investor.